Hey there, guys. Welcome back. So, stocks are going absolutely, completely a lot higher. And I'm going to show you in this video why I've completely changed my mind. I see something that just came up today that is, I think stocks are actually going to go break to all-time new highs and probably even go substantially higher from there. So let's get into it. Let's look at the charts. I'm going to show you guys what I'm looking at. Just kidding, guys. Stocks aren't going higher. At least I don't think so. Charts don't show me that. So I just wanted to flip the algos. And everyone kept saying I needed to put out videos saying the markets are going higher and so that they actually start selling off. Look, guys, here's what I see, all right? Hourly chart momentum on Qs was relatively pretty steep momentum. We're starting to fade. Momentum starting to taper off. But what I see here on the hourly chart in triple Qs, which is the tech sector, we got a price channel now, it looks like. So we've got here's the top reaction, and then kind of another reaction. Don't have that many data points, but we'll mark it, see if it holds. On the low end, we got a reaction here, reaction, and a reaction. We undercut it slightly, but ultimately that held. So we're going to treat this as a valid price channel and see what we got going on. Also, we got the gap fill right here. So that's this big red line. That's your gap entry. We're kind of chopping around there right now. Looks like we dipped below it. They're starting to kind of recover it. We'll see. Also, it looks like you can make a somewhat of a channel right here like that. And we got several reactions. Here's the reaction. And then also looks like we just broke down and maybe we're going to come in for a back test. One thing to note is if this is a breakdown of this rising trend line right here, we got the breakdown this morning and then we're just getting kickback rally this afternoon, and that's probably on light volume. Oftentimes you'll get you get the institutions and the market consensus trading in the morning, and then you get the light chop trading in the afternoon, and then, in the kind of mid session, and then afternoon session, you'll get follow through potentially on the morning session. So just something to watch for. Nothing I can point out that's just drastically different than yesterday as of right now. So we'll just move on. Same deal with SPY, just chopping around this trend line right there. Looks like, that's your resistance. And it looks like we dipped below it, recovering it a little bit. And so, again, nothing drastic. Also, uptrend line right there. So maybe we broke that and doing like a back test, and then we're going to roll over. I don't know. Ultimately, not a lot of change in posture from yesterday to today. The market's pretty quiet, actually. So let's look at some other things, see if we can get some clues from some of the other charts. XLV chopping. All right, this is just chop city. Look at that. You could trade the channel. That's the only thing I would suggest is trade the channel till it breaks. It will break, so you'll get caught one of these days with probably a gap up or a gap down. But you could trade the channel. The channel is getting a little long in the tooth now. By the time everyone spots a channel, usually that's about the end of the channel. So just something to pay attention to. But, lower end of the channel, 96, 90. Upper end of the channel, about 101. We overshoot it several times. But, that's what I see there. XLF, just chopping. Nothing there. Walmart, this is weak. So look at this. We had the bearish. Let me go to the daily here just to point this out. We had this bearish engulfing outside day candle 2 days ago and didn't really get follow through, but we didn't get any buyers really yesterday. So you could say that's probably follow through. Ultimately, it's kind of just because it wasn't a candle that really it was an inside day. It traded inside the previous candle. We're looking for kind of confirmation of price moving outside of this range from this big candle. So if we sell off today, that would be your follow through. It looks like we're starting to get it, but again, we'll have to see. Let's look at the hourly. Yeah, just came down, flagging out a little bit, and looks like it's starting to break. So, you know, you got to wait for that hourly close to break below to give you that confirmation that we're starting to get continued follow through, but looks like it wants to do it. So we'll wait and see what's going on there. If we break this on Walmart, break to the downside, then it's got a lot of momentum. It's got a lot of triggers basically to set this in motion to trade all the way down to 107 or wherever it actually falls within this big bearish rising wedge. And that's just because you've got the, you know, earnings are out of the way. Earnings were faded with the big outside reversal day. And if you get follow through, there's really not much that's going to push this thing higher. It's probably going to continue the momentum grinding lower. So looking on that one, and again, this is an objective area. If we get that follow through, that breakdown right here, that's a good area you could establish a short. You know, that is a technical breakdown of this bearish rising wedge, and we've got the outside day. So it is a good potential area to maybe build a short or start a short position and maybe build onto it as it continues to go in your favor. That's one way to play it. Now, you probably are going to get some sort of back tests of the trend line. You know, it might break down and then chop back up and back test. So, you know, that's why you want to get, you know, if you're going to get positioned on it, you want to position right when it starts to break after you get that first hourly close. And then you can add to the position on back test. That's how I prefer to approach those. Apple, nothing. Microsoft, nothing. I mean, these are just, there's just nothing happening on these. Look at Tesla, broke down the support line, recovered it, and it's just held. So ultimately, we're just chopping. You know, we have these little, this market is full of false breakdowns and false breakouts. It's breaking higher and then fading, breaking down and then recovering. It's just chopping. So you have to be careful, and ultimately, you know, there's not a lot of trades happening, to be honest. There's a few though, so I'll point those out. Home Depot. All right, so to me this one looks weak. Here's why. Look, you had a big outside day right here. I think this was their earnings as well. Or sorry, this is the hourly candle. Let's look at the daily. Okay, yeah. So here's what I see in Home Depot. You've got a trend line on the daily. We broke that trend line and we're chopping around, and then you can see we're starting to break. If I go to the hourly, it gets a little bit more clear. Here's the breakdown. You got a back test right there. We're starting to chop sideways. So what I would be looking for is a break below this support, 234.87 basically. We break below that with an hourly close. That sets us in motion to start heading lower. First line of support I see at 227.50 basically. So we'll just watch that, see where that ends up. Here's another trade idea, Zoom. I got short this one this morning, and the reason why is you had the bearish rising wedge right here. All right, sorry guys, had to take a call. But here's what I'm looking at on this Zoom. So this thing's been in kind of a real momentum trade. Just people have been plowing into Zoom. Everybody and their mom basically plowing into Zoom, thinking that the stay home order, everybody's going to be using Zoom, which is true, I think, for the most part. So it's a sound premise, but what it's created is the price has been inflated. So now we're starting to see bearish technicals starting to form over time, and this is a bearish rising wedge, and you've got a bearish rising wedge typically resolves to the downside. Doesn't always, but usually, the probability sets us up to move to the downside. So what do we have here? Well, we have right here, we open the day right at the top of resistance of that bearish rising wedge, sold right off. Starting to bounce back a little bit, but the initial reaction this morning with volume was to sell, and then, we're getting kind of the middle of the day grind higher. I think that sets us up. It's not an completely impulsive sell signal, but again, with a bearish rising wedge, you can short at resistance, or you can short when you break down the bottom of the wedge. So any way you want to do it, it's a higher probability if you wait till you break the bottom of the wedge that it's going to break down, but you get a better price entry if you short at resistance of before you break the bearish rising wedge. So again, I took a short at the open today. That thing sold off, and I covered about 75% of that short, and then what I'm going to do is hold the 25% to see if we get a resolution down to the bottom of the wedge, and possibly even break. So that is that. And I put this trade out in a video yesterday pointing it out. So anybody who watched that video and had, mirrored the trend lines would have seen the exact same thing that I saw this morning when I took the short. Okay, XOK, someone asked me to point this out. So here's what I see. XOK looks a lot like Qs. It basically is triple Qs. It just doesn't have Amazon. But for the most part, it looks very similar. And what I see is a bearish rising wedge right here. That bearish rising wedge broke right here. We broke support. And then all we've been doing is back testing, really grinding higher. And then finally it broke. And then, we're just chopping now. So basically just kind of chopping up and down. You've got the lower trend line right down here around 92. If that breaks, then, that should set the bearish downward momentum in place. So again, that's what I see in XLK. We're just grinding higher. Now, if you don't look at trend lines, and I always point this out to people, but if you're not looking at trend lines, then all you see is higher prices. And this tricks your eye to make you think that, oh, okay, we're trending up. This is good. We're going higher. But if you look at trend lines, and really if you just eyeball this, you'll see that the momentum has been waning basically. If I draw this out here, if I draw it out, you can see that you've got this, look, it's like starting to curve and fade. So that's just something to point out, that we're starting to lose momentum to the upside. Now, yes, this could be just flagging and then run up again, but what I see is a trend line that was established and then was broken. And the trend line's pretty valid because, look, you held it as support, and then when you broke it, you ran right up to it and continued to grind on it. So pretty clean trend line. Everybody sees that. It's something to watch. Baba. All right, so I wanted to point this out. Someone asked me to point this one out. So here's what I see. And this is a weekly chart, so kind of the bigger picture, but I've got this bearish rising wedge on the weekly, and we're just in the middle of it, kind of continuing to resolve. So what you could do is this thing could continue to grind higher. What I would look to do on this one is short, again, up at resistance of the bearish rising wedge, or potentially on a breakdown of the bearish rising wedge. Right now it's right in the middle, so for me it's just there's no trade here. If you go to the daily, you can see same thing. So nothing to do until we get near resistance or support, and then we'll kind of be able to watch that. But for now, it is resolving in a bearish pattern. So, the probability says over time, eventually this will break to the downside. And, gold's having some selling today. I just want to point out, here's Barrick Gold, the one that I prefer. So I like to show this one. But, and this isn't a gold video. I just want to point out this one. But look, we sold off today right down to support. So again, this is the same as the markets. We're just in a chop zone. There's really nothing going on. It's just up and down, chopping people to death. So when you're, in this situation, I think it makes sense to just kind of sit on your hands. If you have a position, you can take a position, depending on what your view, whether that's bullish or bearish, you can take a position. But, I think you just got to sit on your hands and let things play out. Not, let this chop session end and resolve to either the upside or the downside. Bulls or bear, one of them are going, one of us is going to be right. We don't know, but right now it's just chopping everybody to death. So doesn't make much sense to be trading too much when you're in these channels like this. The trades that I like are things like Zoom, where you have these bearish rising wedges, things that have the potential to break down and become real runner trades. Those are the trades that I'm kind of looking at. The general markets, again, they're just chopping. SPY, it's just kind of chopping, within this big sideways channel. We're just up at the top of the channel, but still just grinding up here. And so, I can easily see this moving down to the bottom of the channel. Eventually we're going to break, and we'll have to determine where that's heading. So, all right, guys. So go ahead and leave a comment on any stocks you want me to look at in maybe the next video, or anything you're kind of interested in. And thank you. Catch you on the next video. Bye.